Hello, everyone. So before I jump directly into sustainability reporting, I want just to give you the result of a survey that was done last year on CEOs. But before I get to that, actually, I'd like to tell you a little bit more about Intelex. So Intelex was founded in 1992, and we've got worldwide clients, and we'll look at this. We've got totally agnostic in terms of the industries we're working with. The company accounts for over 270 employees today, with a lot of global customers and over 1 million end users. We're privately held, independent, and then we are perceived as a very well-managed company. And thanks to our management, but also the employees within the company, we have a lot of awards for this. And then, which means for our clients to have a lot of happy intellectuals serving them. If we look at our client base, we have clients from pretty much every industry and from every continent also. And that's where sustainability is really interesting, because we'll see that a lot of what we collect and report on is really agnostic to the industry and then and where you're sitting in the world. So I was just telling you, there's a little survey that I want to share with you, a survey that was made by the OECD the UN Global Compact in Accenture back in 2013. And in this survey, there was a bunch of CEOs that were surveyed, and then 93% of them believe that sustainability will be important to the future success of their business. 80% view sustainability as a route to competitive advantage in their industry. But in the meantime, and then this is the whole focus of this webinar today, those same CEOs, only 38% of them believe they can accurately quantify the value of their sustainability effort. And 30% of them see the lack of a link to business value as a barrier to accelerating progress. So this is really the topic today, is like, what are the best practices? How can we quantify this value for your sustainability efforts? First, firms published their first wave of corporate CSR and sustainability report in the late 90s and early 2000s. Firms such as Adidas or Nike, if you remember, in 1995, the whole boycott of Nike, that one of their main response to this was to actually publish a CSR report, and that was facing all the scandals around their child labor in the supply chain. And then other firms in the chemical industry, for example, such as BASF or Dow Chemicals, also reported on their CSR activity to bolster pretty much public perception of the chemical industry. The number of firms reporting on their non-financial and sustainability performance grew rapidly and drastically in the past decade. In Europe, for example, the GRI-based sustainability reporting went from 150 reports in 2004 to over 1,100 reports in 2011. Just to give you an idea, and the same growth is happening currently in North America too. But it's not only the increasing interest into sustainability reporting, it's also regulation and policies. Certainly the governments and stock exchanges, for example, have been increasing their regulation and rhetoric around non-financial disclosure and reporting. From the U.S. Securities and Exchange Commission, SEC, conflict minerals, for example. In France, you've got the Grenelle 2, and China's Ministry of Commerce 2008 CSR guidelines, greenhouse gas reporting rules, and all over the world, every country has its own set of reporting rules now. And definitely government are ramping up on the regulation and policy side. But also is the availability of frameworks. Finally, we've got ways to assess and report on sustainability, which is comparable, but that you can benchmark from one industry to another. And this is thanks to those frameworks. There's a lot of frameworks out there, and then and of course some of them have been leading, and then that's the one we're going to talk about today. But definitely, depending on what you're looking into in terms of sustainability, you're going to have to pick the right framework for you.